Hi, hope everyone had an absolute fantastic long weekend. David and I are here now to give you a market update for the month of July. David, how did the investment markets perform in July?
July was yet another positive month for the equity markets overall, Harry. In particular, the United States did quite well, up nearly 3% for the month. Um, in Canada, we saw stocks post a slightly positive gain, but overall pretty flat. The same was true in Europe, a slightly positive gain, but relatively flat too. We did see a lot of volatility in China, though, in July. The government in China has cracked down on certain industries, chief among them technology companies, especially involved in like online banking and finance, online education, and other e-commerce platforms. So we've seen a massive sell-off in Chinese equities through the month of July. The Hong Kong Hang Seng Index was down a little over 8%. And overall, the Asia Pacific region was down a little over 3% for the month of July. Harry, what helped to drive such strong returns for the US equity markets yet again in July?
David, that's an excellent question. And there was really two main drivers that sort of moved the U.S. market. I mean, number one, similar to the first quarter, the second quarter results in the U.S. were just excellent. Corporations were doing really well. In fact, they were doing even better than what analysts expect, and that obviously is going to have a good result in the market itself. And as you touched on a little bit, some of the things that are going on in China. So we see right now all the capitalist enterprises are being sort of pushed a little to the side, and the Chinese government is really supporting the state-run companies. And, that concerns everyone. And so what we're seeing is that billions of dollars are leaving these Chinese corporations, and they're looking for a home. And as I mentioned before, the U.S. market's doing well. Not only well, they're beating analyst expectations. So a lot of that money is finding a new home in the U.S. Are there any risks to the economic outlook at this point?
Overall, the economy seems to be doing very well, Harry. We've seen, corporations obviously posting very good corporate earnings so far here in 2021. We're seeing a lot of good employment statistics coming out, so people are getting back to work in Canada and the United States. We're also seeing a lot of continued fiscal support from central banks. But one risk that we are keeping an eye on for later this year and perhaps into 2022 is obviously the eventual unwinding of all this crisis era fiscal support. So eventually central banks will need to start raising interest rates, and they will stop or they will taper off their asset purchase programs, meaning the amount of money that they're buying in bonds. They'll eventually taper that back. And as that happens, that could be a risk for the momentum for the economy and the markets themselves. But hopefully the central banks will gradually do this, and it won't be immediate, and they won't take the sugar high off, so to speak. And hopefully economic growth will be able to keep pace with their eventual unwinding. That's obviously the goal of the central banks, is to do it gradually and not overnight. They don't want to tank the market, so they shouldn't, but it is a bit of a risk as interest rates start to creep up. That can be a bit of a headwind for the markets. The other risk that we see right now is a little bit more of an acute or near-term risk, and that's the rising rate of infections with COVID due to the Delta variant. So that is obviously getting some headlines in the last couple of months. And the Federal Reserve in their July meeting sort of addressed this to a degree. They mentioned that the Delta variant is something that is of some concern. However, they did temper that and say that it's not as concerning as maybe they thought it was a few months ago. And the reason for that is that due to the pace of vaccinations, we've seen an uptick in cases, but we haven't seen a commensurate uptick in hospitalizations, which is encouraging. The Federal Reserve mentioned that so long as that trend continues, even if there's an uptick in cases, but not hospitalizations, that should mean that we can avoid these broad lockdowns that we saw in 2020, which obviously crippled the economy. So as long as we can avoid that, things should be okay. But the virus is still of somewhat level of concern at this point.
As always, if you have any questions, anything you want to chat with David and I, we would absolutely love to see you. Hopefully you guys can all get out and enjoy some of this beautiful sunshine. Take care.
Take care, guys.